The fate of the euro lies in the hands of the unelected technocrats at the central bank, the ECB. Massive amounts of currency have been printed already in an attempt to increase inflation. As real money flees the banking system, fake printed money finds its way through. Hardship and austerity are rampant throughout Europe right now as a solution to the current economic crisis. In historic terms, this has absolutely never worked. But while we're at it, why not give it one more try? Unusually, we have found, despite the fact that printing a currency usually weakens it, today's topsy-turvy world has clearly demonstrated that printing currency in the short term actually strengthens the value of that particular currency in the forex markets. Perhaps George Orwell was right when he said, "War is peace, freedom is slavery, ignorance is strength." You came here for the truth, so let me unveil that for you. Today we will talk about the ECB printing money, lowering interest rates yet again. I just did a video about this yesterday, and lo and behold, they actually went through with it. Doesn't take a genius, doesn't take a soothsayer to figure it all out. Out of Reuters, the euro jumped while U.S. stocks ended flat on Thursday as new stimulus measures by the ECB were offset by a signal from its chief that it would cut interest rates again, only in the most extreme of circumstances. That's right. They're not going to do everything they can all at once. They're just going to monitor it. And you know what? They're not going to increase, or I should say decrease, the interest rates any further. That's right. They promise. They pinky swear. Investors had initially cheered the ECB's announcement that it will cut rates to a fresh record lows. And, check this out, start buying corporate debt for the first time. That's right. If your companies in your country start taking on too much debt, they start suffering. Of course, only the really big corporations. Well, the government, or I should say the central bank, is going to buy up that garbage debt. Now, what kind of moral hazard are they setting up here? When you could have these big institutions, most likely financial institutions, taking massive amounts of risk, they screw up, and then the central bank prints up a bunch of money and buys their garbage off of them. This is the new world. This is why you can't trust this system. When people say that they're going to invest in a particular stock, you're funding them. You may not see that, and you may think sort of selfishly that, well, I'm just trying to make my own money, and I'm going to pull out the money when I make it all, and I'm going to buy this and that and everything else. But you're funding that system. That's the problem with this. Rates will stay low, very low, for a long period of time and well past the horizon of our purchases, Draghi said, referring to the bank's asset purchase program due to end in March 2017. Just like the Fed, if they actually do end their asset purchases in 2017, you know that the market will either remain stagnant or begin to decline. But here they are, promising that for at least a year, they're going to have low interest rates or negative interest rates, and they will continue to buy up debt, the worst of the worst. So we use this information to predict what's going to happen in the markets. In fact, if we estimate that interest rates will stay at this level, people are wondering about, for example, real estate. Should I buy real estate? What's going to happen to the prices? Look at the price of these interest rates. Look at the policies that they're putting in place. Are they really going to increase interest rates anytime soon? Doesn't seem like it. Anytime soon, at least. So we know that the housing prices in Canada, for example, can continue to inflate, despite the fact that it should have gone down a long time ago. This goes for any asset. Central banks' attempts to kickstart advanced economies following the financial crisis have made the gap between the rich and the poor suggests the bank for international settlements. So the Biz comes out, they had this report, very important when they release a report They have definitely good things to say, but there is a bit of, let's call it misguided or perhaps propaganda. Check out the next paragraph. In the Biz Quarterly Review, they said that they studied the evolution of wealth inequality. France, Germany, Italy, and Spain, and the UK and the US was influenced by monetary policy since the recession. On its face, this conclusion may be intuitive. The collapse in the financial markets disproportionately hurt households in which financial assets make up a greater portion of their net worth. I would wager the fact that, in fact, it was those who were very poor or even the middle class who got hurt more than the rich did. But that's not the way they look at it. Of course, somebody making $125,000 is considered rich by their standards, but the people making billions, the Warren Buffetts of the world, are not factored in here. They're the ones who are essentially moving the markets. They're paying off all the politicians with their lobbyists and so on. They don't count, but all the laws and the loopholes are made for them. So let's move on. San Francisco mulls a state of emergency over homelessness. They're not the only ones right now. Because if you look in this article and others, there's basically a very serious epidemic that is happening right now with homelessness. But countless times on this channel and the mainstream media, you just hear it all the time that everything is just fine. Stop saying that everything is not fine. This is, everything is great. But look at the reality. Look how much poverty there is in the system. Look how bad things really are in certain areas. Yet, not all areas, absolutely. Look at the housing prices in areas like Vancouver in Canada. Look at Singapore. Look at Manhattan. You can see that there is a definite disparity. I just covered that a moment ago. But what's going to happen for the future? Let's look at one more photo. What this insane photo says about LA's homeless crisis. And you can see the individual there taking a nice photo, and there's a homeless guy sleeping right behind. Now, what does this say about the situation, not just about LA, but about the US, about poverty all around the world? It's that since the financial crisis, things have become worse. You can't hide that. You can't deny that. Sure, not every single area, not every single sector of the economy, but ultimately, you can see the pockets have clearly formed, and it doesn't seem to be getting any better. In my book, I talked about the Great Depression. And the unemployment during the Great Depression hit a peak in 1933 at 25%. If you compare those numbers to what we've seen with John Williams out of Shadow Stats, you'll see a very comparable number. Can't really hide that, can't deny that. But even if we use the U6 number, it shows a very serious scenario. Whether or not it's accurate, we see a more accurate number, I would say. What I suggest is that during that time, the U.S. was becoming an industrial powerhouse and a major source of exports. This time, though, we can't grow ourselves out of the mess. We don't have the economy we once had. Money is leaving the West. It's going over to the developing nations. And during the Depression, the laws weren't as restrictive as they are now. And I mean restrictive on individuals and small businesses. Today, however, they put a stranglehold around those small businesses, around individuals. They have to pay more and more taxes. But GE and General Motors and all of the financial institutions have loopholes beyond what any single person would ever be able to achieve. And then you have people like Warren Buffett saying tax the rich. He means tax everyone else but him. While rising debt issuance usually points to a strong economy, danger could be lurking ahead. Last year, credit card debt in the U.S. surged by approximately $71 billion. Look at this. It's near $1 trillion of credit card debt. The research also found that most of the debt accrued in 2015 came in the fourth quarter when Americans tacked on more than $52 billion. Look at this stat. 7 of the past 10 quarters reflecting year-over-year regression in consumer performance. This is exactly why I have been saying this for quite some time. As you see, people aren't buying like they used to, and when they do, they use their credit cards, they use debt. This goes to show you how bad the situation truly is. Poverty, unemployment, massive amounts of credit card debt, massive amounts of debt, homes basically being either left empty or massive amounts of mortgages laid upon them. People are having a very tough time overall, and it doesn't seem to be turning around anytime soon. Now, you're going to have to count all those zeros there. I had to sort of trace back and really calculate that for a second. But you're looking at 1.2 trillion, with a T, trillion, dollars. Fiscal year 2016 taxes set a record through February. Can you believe that? And at the same time, the Fed still run a $350 billion deficit. No matter how much money you throw into this system, they keep spending more and more and more. It's a vicious cycle, and clearly we know their objective, and it is to make individuals like you and I subservient. That's why we have to do our very best to fight against that. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. If you want to look at the book, just head over to Amazon. They have a look inside feature, which will allow you to flip through the pages of the book and see if you like it. Take care. And if you're not a subscriber already, it is so crucial to become a subscriber. I do videos almost every single day, so you will be able to keep up with the news, look at the research, look at the history, and I do so in a jam-packed and compact format. Take care.